A stock essentially is a unit of ownership in a company. For instance, I own shares in Facebook. It means that I'm a shareholder of Facebook. I'm a part owner of Facebook. I'm entitled to a portion of the profits of Facebook that they decide to pay out to owners of Facebook. I'm a part owner of Facebook. Essentially, shares represent a claim or unit of ownership or a stake in a company. That's what shares are. So share, there's no difference. They're just different names for the same thing essentially. Stocks, shares, equities, investments, equity stakes, they all refer to the same thing, a unit of ownership in a company. It's different from creditors or a bondholder who is a borrower to a company. A stockholder or a stock investor is someone who owns shares in a company. Equity investors stand to gain from a company in two ways. First, as I said earlier, they have access to dividend payments of the company. For instance, if Facebook at the end of last year declared profits of $100 million, and out of that $100 million, they decided to pay back to the shareholders $50 million. As a shareholder of Facebook, I'm entitled to, if I own one share of Facebook, I'm entitled to the amount of units of, I'm entitled to a portion of that $50 million dividends paid out to shareholders. The second type of return available to equity investors or shareholders is possibility of capital gains, which is the prospect that I may be able to sell my Facebook shares for a higher price than the price at which I purchased those shares at. For example, assuming I purchased my Facebook shares at $2 and today the price of Facebook rises to about $40, I will be able to sell my shares and book in a profit on that transaction, essentially. So shareholders have access to two types of returns, capital gains as well as dividend income. So stocks give you an exposure to variable income, which often tends to move around with the economic growth or developments in regards to every economy. How do we invest in stocks?